How to get approved for a 12-month bank statement mortgage if you're self-employed or a private contractor, coming up. Hey guys, I'm Adam Lesner, and my oxygen is getting borrowers approved for a mortgage when other lenders say that it's just not possible. Today, we're diving straight into 12-month bank statement mortgage, everything you need to know about what to expect to get approved, how to get approved, and what to expect with this product. So let's just jump right into it, take a look. When applying for a mortgage as a business owner, it's extremely common to hear that qualifying isn't possible due to tax write-offs. The solution may be a 12-month bank statement mortgage to accomplish your home ownership goals. So what is a 12-month bank statement mortgage? This is a loan option that's available to business owners and 1099 private contractors to get approved with 12 months bank statements, not tax returns. So this is available on a home purchase, rate and term refinance, and a cash out refinance. On this product, you can use personal bank statements and business bank statements as well. So how does a 12-month bank statement mortgage work? Just like any other mortgage, you'll submit your application and supporting documents, but instead of providing tax returns, you'll provide 12-month bank statements along with a business narrative. When you submit the bank statements, be sure to provide legible copies of all 12 months bank statements in PDF format or in the most organized way you possibly can. You can typically get 12 months bank statements on your online account with your bank, or if you can't, you may have to go into a local branch and get those statements from them as well. Borrowers who are extremely organized and provide legible docs always close faster. Once your bank statements and business narrative are provided, your file will be submitted for income review. The income review consists of lender calculating an average of 12 months deposits. Important note to keep in mind, if there are any pattern of non-sufficient funds or NSFs in the account provided, there's a strong likelihood that the loan's going to be denied. So what's a business narrative that I was talking about? As I mentioned, along with the bank statements, a business narrative will be needed when getting submitted for income review. We'll provide the format for you, but basically a business narrative is you just giving a quick picture, a snapshot of what the business is, including things like the business name, number, and address, business type, whether it's a product or a service type of business, the outlook of the business moving forward, information about the product or services offered by the business, number of employees that you have, and percentage of ownership of the business that you have. So let's take a look at how your bank statements will be reviewed. Personal account. Your income calculation will depend on how you operate your business and how you pay yourself. If you pay yourself from a business account into a personal account, then you should be able to use 100% of the deposits that you receive from the business account. If you don't have a business account and you operate your business out of the personal account, then it'll be treated as a business account and an expense factor will be applied. So a business account, how's that looked at on a 12-month bank statement mortgage? When using a business bank statement to qualify, there will be an expense factor applied against your deposits to account for overhead. Typically, to be safe, the expense factor is 50%. So if you have $300,000 in deposits over the last 12 months, your eligible income would be $150,000. However, if you have no employees and you're in a business that has very little overhead, a lower expense factor may be used. So if you have a CPA who can confirm a lower expense factor than what the income review team determines should be used, a CPA letter can be submitted to have your expense factor reconsidered. So on a home purchase with a 12-month bank statement mortgage, so you can purchase a primary residence, a second home, and an investment property with a bank statement mortgage. Although for an investment property, if you're doing an alternative doc type of loan, I would suggest doing a DSCR loan. I'll include a link in the description below on that as well. But those are great for investment properties for simplicity purposes. But back to bank statement mortgages. You can do as low as 10% down with the 700 credit score, a maximum debt to income ratio of 50%, which means your liabilities, including the mortgage and anything that's on your credit, needs to be half of whatever your monthly income is, right? There are 30-year fixed options available on this. Minimum loan on this is $150,000. Minimum credit score is 620, and that's going to require at least 20% down. And first-time home buyers are acceptable. So keep in mind, we are entering one of the best buyers markets in recent years. The insane bidding wars of 2019 through early 2022 are pretty much over. So if you've been thinking about buying a home over the last couple of years, your timing now is perfect. Let's look at on a home refinance side on a 12-month bank statement mortgage. So there's many reasons to refinance, whether you're looking to consolidate debt or lower your payment. Here's what you can expect at a refinance for a 12-month bank statement mortgage. Up to 80% loan to value ratio, maximum debt to income ratio of 50%. Again, what that means is your liabilities need to be half of whatever your income is. 30-year fixed options available. Minimum loan amount's $150,000. Minimum credit score is 620. For a cash out refinance, this requires at least one borrower to be on title for at least 6 months. So what to expect with the approval process? With this type of alternative loan, you can still expect the loan to be fully underwritten with the exception of tax returns. That means your assets and credit will need to be fully verified, and the property needs to meet lender requirements. The best thing that you can do to set yourself up for success for this type of loan, and really any type of loan for that matter, is to provide exactly what the lender asks of you. Don't send in partial bank statements, missing pages, or expired documents. Providing complete and clear documentation will speed up the process and reduce the need for additional or multiple requests for the same conditions. Bonus tip: if you don't qualify for 12-month bank statement mortgage, there are other options available. You can also look at getting approved based on 24 months bank statements or a 12-month profit and loss statement if it's prepared by a CPA or a licensed tax preparer. In summary, on a 12-month bank statement mortgage, as a business owner or 1099 private contractor, if you don't qualify for traditional financing, you may be eligible to get approved with a 12-month bank statement mortgage. Things to keep in mind: this is available on home purchase, refinance, and cash out refinance. This can be done with personal or business bank statements, and really just set yourself up for success by being extremely thorough and organized when submitting your application and supporting documents. There are additional options available even if you don't meet the 12-month bank statement requirements. The most important thing that you can do is work with a lender who is extremely experienced with these types of loans. I'm going to include a link in the description on everything that I just covered. Feel free to reach out, ask me any questions that you have, drop a comment below on any questions that you have, and of course, don't forget to subscribe. I hope this was helpful and look forward to seeing you next time.